You guys both here. Derek, we'll start with you because HBO Max is hiking prices. There are reports of YouTube launching these free ads. I don't even understand what fast channels are and how they're different from everything else out there. Maybe you can help demystify this for us.
It's kind of like every single entertainment company wants to become the same entertainment company. Like lots of people started in advertising, or started, I should say, in linear TV, live TV. They want to get into streaming. And now you have companies that started in streaming. They want to add advertising. Like they're essentially to recreate the cable bundle. That's what Netflix is trying to do with its partnership with Microsoft. So I see the underlying driver of all this being the fact that inflation happened, rates went up, and streaming, which looked like the life raft that everyone was going to sail away on into this bright, beautiful future, turned out to be a money pit. I mean, point out, we're looking right now at the screen, point out which company here is doing fantastically. Disney fired its CEO. Netflix has its stock in the toilet. Warner Brothers Discovery, which owns HBO Max, is really struggling as well. Peacock is losing billions of dollars. Paramount, don't even talk about it. Everyone is struggling in a similar way, and they're all trying to figure out how do we get through this. You know, adding advertising and raising prices for your subscription products, that's a good way to try to get through it.
Casey, is Nelson Peltz coming in here to be the adult in the room? Or, you know, he said on in his interview with David Faber yesterday, he thinks streaming isn't that hard and Disney needs to just go ahead and make it more profitable. What does he see that everyone else is missing?
It's really hard for me to say. I think that Derek is right. People did just get a bit too optimistic about the upside here. I mean, I still prefer streaming to my old cable bundle, which was full of mostly stuff I never wanted to see. But there's just no denying that the prices keep creeping up. And frankly, the quality isn't getting that much better. So I can understand why there's a lot of frustration all around.
Yeah, well said. And I can't remember whose tweet it was, but they basically, this ties together our whole segment today, gentlemen. I think they said, you know, we've all been sold on a bad bag of goods here. Derek, I always think of you as like the millennial malaise correspondent. And it's like the gig, you know, we were supposed to have streaming and the gig economy and all these. Now we have, you know, AI, all these great things that were supposed to help us now look like they're going to be more expensive than the things that they replaced.
Yeah, I hate to be the millennial malaise correspondent, so you made me say that really quickly on television. You're seeing it obviously in the gig economy as well, and the fact that, you know, Uber drivers are struggling to make money. I see Uber very much, and frankly, to a certain extent, streaming as well. This is a macroeconomic story. This is a story about the fact that we're still kind of living in the shadow of the housing crisis. You had the housing crisis. You had a huge recession. You had the Fed bring interest rates down to zero. You had ZIRP, zero rate interest policy, for a decade plus. And it created a really weird economy. It created a lot of illusions about what was going to be the future of tech. And a lot of people got into things like crypto or like streaming. Not that I'm comparing the utility there, but they got into certain categories and products they thought would be super profitable and ended up not being particularly profitable before rates went up. So I think that's one of the reasons why you're seeing Uber struggle as well. They're having to raise prices just like HBO Max, except the prices here are the wages for their drivers to get out of their stock market doldrums.
And Casey, and we talked with a stock picker earlier this week who's bearish on DoorDash because he thinks the same problem. The business model doesn't make sense. And if they keep raising prices, they're going to alienate consumers. Where does this leave us? Because, you know, unfortunately, if you're the legacy business that got disrupted, you went away. I mean, this destroyed people's livelihoods. And I appreciate a lot of the improvements it brings in. But if it's not sustainable, especially in a higher rate environment, well, then what?
You know, I'm still a little bit on the fence over whether these businesses are truly unsustainable. You read that New York Times story about Uber driver. A lot of these people are pulling in between 60 and 100K a year, right? Wow. These are not terrible jobs. You know, it's definitely the case that we're seeing some fluctuations in demand. And of course, nobody wants to pay more for an Uber ride, but there's a real business there. DoorDash is the same thing, right? People have gotten used to ordering food to their doors and they're not going to be content with pizza and Chinese food. So I'm still confident that at the end of the day, these businesses are going to be around, but we're going to have to keep playing around with these business models and also just probably get used to higher prices.